All right, guys. So today we're going to be looking at the NQ charts once again. It is the weekend. I'm recording this on December 13th of 2025. Right now I'm in the middle of doing some back testing. I'm, watching some strategy videos. I'm recapping the week to, hopefully learn some things and have a better week. I didn't necessarily end this week as strongly or exactly how I would have wanted, but that's okay. That's part of the process. That's part of the journey. So we are looking right now at December 12th pre-market and a little bit of the market open for NQ and kind of just like trying to get into a thought process of what was going on December 12th and kind of the big trade of the day that I really think that there was to make that I actually missed out on. But in review, it's like, oh, this is the trade that I wish I would have taken, not only just in hindsight, but like, this trade worked out really well. How could we have identified it and why was maybe my bias a little bit wrong? So if we zoom out here a little bit, we can see that, coming into December 12th, we were kind of all over the place. I'll put my face in the middle and you can see it's like, we're not necessarily in huge premium or huge discount over on, this side of the screen. Let me, over on the side of the screen, we're kind of in the middle. We had some high highs, we had some low lows, but we're kind of getting to a middling point. But what I do actually think is kind of interesting here is on this chart, you can see we went up, we came back down, we chopped around here for a long time, and then we went lower. And when we came back up, coming into the pre-market of December 12th, this is like 9 a.m., this is right before open, we hit a top here and then we started coming back down. So the big key point here, the bias that I think, you should have had coming into this day was bearish. I think you should have been looking, for the potential of shorting opportunities because we formed a lower high here. We were up, we chopped around, we went lower, and the next peak we formed was much, much, much below. We came up, we came down again, and then up and then back down. This was a very, very bearish signal. You should have had, bearish tendencies going on, and I did think that the market was going to be going lower, but in my mind, what I was doing was that meant, oh, we're going to be in heavy discount, so I'm going to be looking for longs, and that's kind of why I got burnt on this December 12th date, because I was stuck looking for longs when the easy answer was that, hey, we should probably be looking for short setups and short opportunities, and the market is probably going to be going lower. So with that in mind, trying to see where the good shorts of the day were going to be, I think this all started to make a lot more sense. So we're going to zoom in a little bit and we're going to see, the market open on December 12th. And you can see here's our 930 candle. We start to go down a little bit. We start coming back up and we do, form a couple of fair value gaps on our way up here. I think here is kind of an interesting one. This is one of the ones that's definitely going to end up being in play here. We formed this fair value gap on the 936 candle. And then we go up, and right here we actually sweep. I can't talk. We sweep a level of liquidity back to here. Now, this is not like the most no-brainer setup in the world, which is why I kind of missed out on this trade in the moment. This is not a trade I took again, but this wasn't the best setup in the world or the best setup on paper, but I think it was in play. Again, if you had a strong shorting bias coming into the day, if something fits your strong bias or, your very, very clear bias, I think you could be a little bit more lenient on, having all of the setups necessarily in place. But you can see here, we did not sweep these two levels of liquidity above, and that's what, worried me and scared me a little bit. We did have these two levels of liquidity up above that did not get swept. You'd like to see all the levels of liquidity around it to get swept, and that's how you're going to have a really, really no-brainer, really, really amazing trade. But like I said, we've now identified that the bias was very, very strong to the downside on this day. So I think it's okay, and you can always size down if you don't feel, as confident, or you can maybe keep your stop loss a little bit tighter. You can maybe, be willing to get out of the trade a little bit quicker or whatever. But what we did have going on here is, again, we swept this area of liquidity right here. We formed this fair value gap. We ripped through it with this very, very strong 941 candle. You can see it ripped all the way down. It ended up closing, it came back a lot, which is not necessarily a great thing, but it did close outside of that fair value gap. And I think that, again, in hindsight, this was a really, really key point to be able to get in. Now, we will see, if you didn't love this entry for whatever reason, we will look at another one here in a second. But here was a potential level of entry. And again, you could have gotten in right here. And again, I think this would have been in play for anything. I know right now, Apex has a really, really nice, holiday discount going on. You can get 90% off Apex accounts. They have like a deal on the lifetime fees. They have a deal on the combines, like whatever. So if you wanted to take this on your Apex combines, this would have been fine. You could have taken, 5 contracts, 10 contracts, contracts, whatever, you would have been able to cash out very, very quickly, because we can look and see, say you took this on 5 contracts. I think this is what I did for my last round of 20 Apex Combines. You could have taken this on 5 contracts. For 5 contracts, you need $3,000 worth of profit. And you can see here, you would have got in and you literally just would have gone straight to full profit. You would have been able to get it, very, very easily. Also, you have the option to take, Apex on 10 contracts during your combines. So again, even if you were going for $3,000 of profit on 10 contracts, you would have gotten that very easily. Top Step combines, you could have done this as well. Again, that's 5 contracts. We only need $1,500 worth of profit today. So combines, this would have worked out very, very well, but obviously this would have worked out for fundeds. Obviously, if I'm doing fundeds, I'm not going to be taking 5 contracts or 10 contracts or whatever, but let's see what this looked like on 1 contract. So if we get in here, once we completely invert this, fair value gap, that is our entry point. Our stop loss is going to be at the top of the candle where, actually our fair value gap forms. So we're risking about $305 on 1 contract. I think it's totally fine. That's a totally fine amount of money to risk, in a funded account, Top Step 50K, Apex 50K, whatever. So this trade, I think, is very, very good there. And again, if you weren't super confident about it, only risking $300, that's not the end of the world. You can take a $300 loss and your account is still going to be fine. That still fits within, pretty natural risk and reward and stuff like that, whatever. So I think this, on the surface level, this trade is totally fine. This trade is totally in play. And you could have taken this down to the next major liquidity level. And again, we pretty much went straight there. It was pretty much a straight line down to that. Yes, we had this kind of 946 candle where we came back up a little bit, but we pretty much went back down. You would have hit full profit again. You would have been risking 300. You would have made 1125. I don't know exactly what the RR ends up being there, but it ends up being pretty damn good. Let's pull up this here and see, exactly what we're working with. That's not what I meant. I wanted a short position. We're going to open that up right here. Again, you can take this to here. That's where we would have been risking to go to full profit. And you have about a 3.69 RR. I think that's totally normal. That's great. Whatever. This trade worked insanely well. But maybe, like I said, if you were really, really strong or really, really dedicated to that short side, there's definitely other levels of liquidity that we could have been targeting. We can zoom out. I think probably like going to like the 1 hour or maybe even the 15-minute might be a little bit better way of seeing this. But there was plenty of areas of liquidity below that we could have been targeting. And it's actually crazy, how this day ended up working out. So you can see here, once we broke through this area of liquidity, let me see where we're even at, because there's definitely a lot going on here. So here's where we had, this set up here. But after we break through that, we have a lot of room to fall. Let me make sure you guys can see this, and my head's not going to be in the way. So over to the left, those are going to be the next major areas. We have like one major area around here, which I think is kind of interesting. This is going to be from December 11th. This is only one day before, like a previous day type of level. And then here again, you have another level from December 11th. So you have previous day lows that are going to be the next major areas for us to target. And then as we zoom out even further, you can see here we have another one on December 10th, which is, like a earlier in the week low, is another maybe another area we can look at. Again, that's not really that much lower than the other one. But then if we zoom out even further, you can see if once we start to break those, this gets really, really, really crazy. We have the lows from December 2nd. We have, the lows from December 1st. We have more lows from December 1st. So there starts to be some really, really crazy and really, aggressive levels you can go after. And then we also have, November 26 liquidity. Here's another November 26 liquidity. So if you really, felt strongly about going like all the way to here or something like that, which, potentially could have been in play, who knows? You can see that this trade ended up, this was a massive, massive, massive downward movement on the NQ today. This thing got really out of hand. We really started breaking all those levels and just falling. This was a free fall type of day for NQ. So we can go to the 1 minute. And we can pull back up where we were before, and you can see that, if you were really confident and holding this thing to the downside, we can start to zoom out and see just how far this thing went down. It's not letting me take it this low, but you can see that we ended up going all the way down to these levels, which is, again, one of those areas of liquidity that we mapped out. You're looking at something like a 30 RR trade there. Now, again, that's not something that I would recommend taking. That's not something, that probably even makes sense, especially, on like an Apex account where they have like the limits to the even amount of profit you can get in a single day toward taking your payouts. But something like Top Step, where you can just go and go and go, if you wanted to leave a runner or, keep hitting these next levels of liquidity, this could have gotten absolutely insane. And again, with just one NQ contract in total, even if you were just taking this down to the, levels of liquidity that really made sense, you're talking about something like a $1,000 trade here, which was absolutely crazy. Now, again, I think you would have had to have a little bit of insanity going on to hold on to it that long. And I don't, again, like I said, I don't necessarily recommend that you should have held on to this trade that long, or that was even like necessarily the play or whatever. But I just think it's a little bit interesting that, the downward and bearish bias was definitely here coming into the day. And you can just see how we just kept knocking out those levels of liquidity. And every single time, if you were looking for longs, like I said, I was looking for longs today incorrectly. I was, noticing that, hey, as we go down lower and lower and lower, we are, hitting super, super discount. We're really, really, really in discount. We're kind of set to pull away. We're getting so overstretched. We're getting so far on the downside. And eventually things did start to turn around. But man, you would have gotten broken even or stopped out so many times along the way. There was a little bit of money to be made with longs. You can see a couple times where we went lower and came back up. Went lower, came back up. But if you were being aggressive with your longs and really, really expecting some major pullback to the upside, you were sadly mistaken. And again, I think that's because the bias of the day was clearly in the bearish section, and that is, where I kind of went wrong. But for taking this trade, I think a very, very realistic amount to take this trade for was, again, I think you have a couple of different options here. Once we got in here, again, I think you definitely could have taken it down to this level, would have been totally fine for like $1,000 trade that ended up being really, really good. Now, as far as another trade you could have taken, again, if you didn't like that one or if you missed out on that one or whatever, I think we had another very, very nice short setup here, again, off of, let me make sure I'm not covering this up with my face. Here we have another fair value gap that lined up very, very nicely. Here you go. We have, sweep of this liquidity level right here. We come up, we sweep it. We have this very, very nice 10 o'clock candle that just kind of knocks this out. And yes, it actually does go very, very below this fair value gap, which is a little bit scary, a little bit worrisome, but that's okay. Our stop loss here on this one is going to be a little bit bigger, so it's going to be a little bit riskier of a trade. Maybe you want to go down to some micros. Maybe you want to scale down on this a little bit. But again, here, if you were taking this trade, you would have been hoping or expecting us to take out some of these other levels of liquidity. So you could have taken it down to one of these white lines that we have set up. Again, your first one would have been here. This would be about a little bit like a 1.5 risk reward ratio, something like that, which is not a bad trade at all. But if you wanted to take it even lower, I think you definitely could have taken it down to this next level and had like a 3 RR, something like that. And again, these shorts would have played out very, very, very nicely. So I think you had two very valid shorts today from this 941 candle and from this 10 o'clock candle that both, went to full profit and beyond. A very, very crazy day in the market. But again, I was incorrect. I was looking for longs, and that was because I messed up, my bias for the day. I didn't really keep that bias in mind. I was just thinking, hey, we're going down. The market's tanking. We're in discount. But really, when the bearish sentiment is this strong, you need to be looking for shorts. And there was a couple very, very clear short setups on this day. So I'm hoping to, learn from the mistakes that were made today. And you can see here how you could have made a lot of money in the market today if you had your head in the right place. But that's pretty much it for this video today, guys. Hopefully I catch you in the next one. Until then, peace.